Okay, good day everyone. This is Mapletree Pan Asia Commercial Trust 4th quarter and FY24-25 financial results stated 25th April 2025. Right, we look at the key highlights. Right, DPU is down. Alright, third quarter was 2 cents. This quarter is 1.95 Singapore cents. Right, NAV is up. Alright, due to revaluation of properties higher. Right, leverage is down. Alright, I think likely due to the case of properties being revalued higher as well. AUM is slightly higher. Right, because properties, their overall properties got revalued higher. Right, occupancy however has dropped from 90% from third quarter. Right, again highlights for fourth quarter versus this financial year versus fourth quarter last financial year. Okay, VivoCity shows continued strength. Right, lower operating and financial costs. Right, so they're trying to do what they can to reduce the impact of dropping revenue lah, which is what their main problem is right now. Right, so their overall portfolio revenue is dropping. Right, so a divestment of Anson, not going to discuss this because we've talked about it a lot. Right, overseas properties always have this issue of converting back to SGD, and because SGD is strong, right, there will result in a drop in the overseas contributions, but that's not the only issue lah. Right, long-term financing, they actually got some good financing, right, at 3.1% per annum. Alright, this is a good interest rate comparing to their general interest rate of 3.51%. Right, so the overall cost of debt is 3.51. Right, so this is cheap. Right, yeah, their gearing is one good point lah. Right, mainly from the sale of Mapletree Anson. Right, but I will also discuss the recent downgrade from Moody, which is the one that gives them their credit score. Alright, so Moody lately wrote a result that came out after this report that they downgraded Mapletree Pan Asia from BAA1 to BAA2, right, due to credit quality deteriorated. Alright, so they say that Moody projects less earning over the next 2 years because of negative rental revisions and falling occupancy, which both are quite big issues in this REIT. Right, so this is not a good thing because it may increase the cost of debt that they have to refinance in the next few years, or in at least the next 2 years lah. So I think this downgrade is likely to last for at least 2 years. Right, yeah, slightly lower occupancy, below 90%. Right, last round it was 90%. Right, VivoCity, the only strong point is VivoCity lah. They'll just tell you VivoCity. Right, first of all, they say outperform the market, but if you look at rental revisions and sales, it's still not good basically. Right, fourth quarter versus fourth quarter last financial year. Right, you can see revenue is down 6.8%, operating expense down 4.9%. Well, this is decent, right, but you can see that this is a lower drop than this. Right, so I would say that not great lah. Right, net property income is down 7.4%, financial costs down 9.4%. Okay, I have to give credit to management for being dropping the financial costs, right, mainly due to using Mapletree Anson's divestment towards debt reduction. Right, you can see all three Mapletrees are doing this since this financial year, but frankly I would say that I won't blame Mapletree Pan because they don't sell properties that often. Their properties tend to be very big and difficult to sell. Right, so Mapletree Pan, they have done well in using the divestment to pay down the debt. Right, but for Mapletree Industrial and Logistics, I think they started doing this too late. Alright, they did it this financial year, but I think it's a bit too late. They should have started last financial year. Okay, so however, the issue here is this could have been bigger drop if not for high interest rate on Hong Kong dollar and JPY borrowings. Right, JPY is a worry because normally this is where the cheap borrowing come from If this interest rate starts to go up, it will also affect Mapletree Logistics and Industrial as well. Right, so anyway, DPU is a big drop, right, from last fourth quarter, down 14.8%. Right, lower overseas contributions, we know already. The properties are doing badly, plus the forex exchange rate is not favorable. Right, so mitigated by Singapore's stable contribution, lower property expenses. Alright, they at least tried to do this, reduce property expense and lower financial costs due to reduced borrowing post-divestments. Right, so we look at the fourth quarter versus fourth quarter. We don't compare with third quarter because there's seasonality effect generally, especially from the retail side. Right, so if we look at the performance, it's quite bad. Right, you can see that revenue, right, everywhere drop, right? So every X here is a drop, right? So 3 to 2.8 here, this for South Korea, right? Then dark blue is Japan, down, China down, Festival Walk Hong Kong down, Singapore properties also down, alright? But this one, there's partial reasons due to the Mapletree Anson removal lah. Alright, this one I believe includes Mapletree Anson's contribution, so maybe you can ignore the grey one, right? But you can see that VivoCity is the only one that go up, alright, increased revenue, alright, and you look at MBC again down, alright. VivoCity I visited last Monday, right? So last Monday was, I think, was it last Monday or last Sunday? Yeah, I cannot remember, but I think it was last Sunday, yeah. And when I went down, I couldn't find parking at all. I had to go all the way to the roof to find parking for VivoCity, and the roof was full. Right, so that's how popular VivoCity is, and I think in time to come, it should be the anchor for this particular REIT lah. Okay, so NPI is the same story. Not going to go through. All right, underperformance from everything except VivoCity. All right, we see when this started. All right, I think I showed you before, but I'll show you again. This is third quarter results. All right, you can see that third quarter also, third quarter also everything performed badly except VivoCity. Alright, both from revenue and MPI. Alright, second quarter results, you can see that actually the Singapore property did okay. Right, this is 20.1 is removing Mapletree Anson. Right, so if Mapletree Anson is removed, actually this number went up. Alright, so second quarter, right, MBC started to underperform already, but Mapletree, VivoCity rather, and the other Singapore properties were still doing okay. They were still on an uptrend. Right, but the rest were down lah. The rest were down already. Right, so second quarter results, there were two things holding up: other Singapore properties and VivoCity. Third quarter, the other Singapore properties start to underperform. Alright, so that means VivoCity is the last one performing well. Right, that's why I call it Helm's Deep. Right, so back to here, I didn't do a removal for Mapletree Anson here. Alright, yeah, but it's 9.5 million. Alright, so 9.5 million minus this, around 10 million, 17.3 plus 5, 17.8. So 17.8, so not too bad. You see, 27.3 minus 9.5 is 17.8. 17.8 to 17.9 means actually this one went up. Alright, good. So yeah, so there's a slight uptick in performance this time round. Alright, so that's a good thing. Okay, let's try to have a look at MPI. 21.2 minus 7.8, so minus 8, 13.2 plus 0.8, 13.2, 14, so this was 14, yeah, but MPI is still down. Alright, so this one is still down. This one was up, but this one is down. So overall I would still say only VivoCity is performing. Alright, because MPI will trickle down to your DPU. Alright, year on year, I won't talk too much because we actually look at quarter on quarter, right? The only thing good is, they divested the property and pay off their debt, which is a good thing, right? Even if without currency risk and some one-off, right, the DPU will be down 8.6% year on year, alright? So this year on year result still not a good result. Okay, so you can see that Singapore is core, alright, 60% of the market, 60% of the revenue come from Singapore, 61% of MPI come from Singapore, alright, and 51% is core assets. Core assets means these two lah. They say they never sell these two, which they really shouldn't. Right, this will become totally uninvestable if they sell those two assets. Right, so valuation wise, we'll see that this is the drop in valuation. The more serious drops are here, right? Festival Walk and Gateway Plaza and Sun Hill Plaza, right, which are the China properties and Hong Kong properties. Right, Japan, the drop seems less. Right, Gundam, I'm not too concerned because Korea is very small. Right, so overseas properties dropped by 4.4%. Singapore up by 7.9%. So actually the overall properties valuation up by 2.2%, which is why their gearing ratio dropped and their property valuation as a whole went up. Right, basically held up by Singapore lah. You can see VivoCity up 14.8% valuation wise, which I don't think is a stretch given how strong it is. Right, MBC 1 and 2, the increase is less. Right, so Singapore properties holding up the portfolio by 7.9%. Right, Japan is a drop lah, no need to say. Right, so I'm not going to cover too much about this. Net borrowings went down. Alright, from last year, which is expected. They paid off borrowings, but NAV went up. Right, so NAV is now 1.78. Right, if I want to just value this by Singapore properties with 60% of revenue, right? So I look at this, it's 60% of revenue and 61% of MPI. Right, so I just take 60%. Right, 60% of the NAV is around $1.07. Right, $1.07 is where I would be very interested to buy MPACT. Right, you can argue that why am I ignoring all the overseas assets, because they are not exactly valueless, right? And I take that argument, right? So if you want, you can buy slightly higher based on how much you want to value the overseas assets, right? So maybe at 110 or 115, if you want to value the overseas assets at that much, you can go and do it yourself, right? So for me, maybe I'll be interested around $1.10 in this REIT. Hey, not financial advice, just my personal opinion. Right, so gross debt outstanding is down, that's great. Leverage ratio is down, that's good as well. Right, interest coverage ratio is slightly down, so not great. Right, this is not good. Right, and cost of debt is a worry because of the Moody's downgrade. Alright, so it's no longer Baa1 negative, it's now Baa2. Right, so this thing is not updated. Right, because the Moody's release was after this PowerPoint presentation. Right. Yeah, we talk about the cheap debt, right? This is the worry moving forward. How much this about 21%, right? So I expect the downgrade to last for about 2 years, right? So this 21%, how much more interest will they pay? I don't think has been priced into this REIT. That's my opinion, okay? So skipping all these parts, alright. You can see portfolio highlights for the retail side. VivoCity tenant sales is down, shopper traffic is down, but there's some reason for this. Festival Walk, although shopper traffic is up, I don't think it's useful, especially if they're not spending. Alright, so your mall is going to not make as much money, and therefore they will request for lower rents, right? So you can see in terms of occupancy, MBC is down, VivoCity is down slightly, right? Other SGD properties is up, right? So this is a slight bright spot, right? So this one got slight improvement over third quarter, because third quarter you look at the results, right? Revenue was down, NPL was down. Fourth quarter, right, revenue is down, as we just saw earlier, but revenue is up, but MPI is down. So Singapore properties got other Singapore properties got a slight improvement in performance, right? Otherwise, the rest of the performance is not very big, right? Japan is sort of expected, We know they got some problems since about 1 or 2 quarters ago. Right, FY24-25, you can see strong rental revisions, right? But I think as we've discussed, the third and fourth quarter not performing so well, right? Especially this part. Right, MBC has not been performing well since, let's try and see, this second quarter, MBC not performing already. First quarter MBC was still performing. So you see, this year, right, has been quite a bad year for MPACT. Second quarter MBC start to underperform because this first quarter, right? So first quarter still up and up. MBC, it's basically first quarter, the whole Singapore site, right? Both MBC, VivoCity, and other Singapore properties, plus Festival Walk was doing well. That's first quarter. But from second quarter onwards, everything started to go bad, right? So Hong Kong started to do badly. MBC also started to do badly. But the big shocker was MBC. Hong Kong, maybe we can accept. Then the third quarter, you see even other Singapore properties did badly. This one is stripping out Mapletree Anson, right? So I think 17.7 is after you take out Mapletree Anson. Then it dropped to 17.5. Likewise here, 13.3 is after you strip out Mapletree Anson, right? Because this one included an extra property that this one don't have. Right, so this year has been quite a bad year for MPACT in general. Right, so we look at what's going on with office business parks. I think there's stress here, right? You can see the rental revision is barely above inflation, right? I'm not even sure if this is above inflation. I think it's below inflation, right? So MBC rental revision only 2.2%, occupancy is pretty low, right? But I think overall offices or business parks in Singapore, right, have some occupancy issues. I think there's oversupply in Singapore, and the Trump wars are not helping because of the tariffs, right? Nobody dared to make long-term business decisions, and nobody will sign a long-term contract, especially if you don't give me a discount, right? So I think this one will suffer until Trump stops his tariff, right? Which I don't know when it will happen. Yeah, so China and Japan rental revision, you can see not very good, right? Festival Walk still a problem, right? -7%, right? I don't know when this is going to stop bleeding. I think 2 years ago, the CEO was saying she was hopeful that this will stop, but the bleeding hasn't stopped, right? So not a good thing, right? So VivoCity, why the tenant sales and dropped 2.1% could be due to this AEI works in basement 2 So hopefully this once it's over, right, this will remain return to its uptrend, right, which has always been for VivoCity, right? So this is what they're doing at the AEI at VivoCity, right? And yeah, I'm not going to talk too much about this. Festival Walk is a lot of effort, right, to improve shopper traffic, but does not translate to tenant sales, right? So you see, tenant sales every quarter is dropping, right? I don't know how to save Festival Walk, frankly, right? You see, if your tenant sales drop by 8.4%, likely this is going to translate to a rough 8.4% drop in rent as well, alright? So we expect a negative rental revisions for Festival Walk to carry on. Right, I think whatever they do, I mean they're doing a lot of things. You can see all this marketing to drive footfall, but it's not translating to sales, right? Which means that people are just visiting to entertain themselves, but not spending enough money in the malls, right? So not a good thing, right? Not going to cover all this. I think not super important. Outlook, yeah, just like that. I'll just give you one line. Business confidence and consumer sentiment are expected to weaken. Alright, so not a very positive outlook. Alright, so with that, I don't think I'll cover too much. Alright, they're just saying here that there's some URA development going on in the area. Alright, so hopefully, yeah, VivoCity will benefit. Alright, so with that, I think I'll end the presentation. Thank you for listening. Please note that no financial advice is given in this presentation, and do give me a thumbs up if you've learned something. Thank you.